Is there a point, Halima, at which rising energy prices could tip economies, not just in the U.S., but around the globe, into recession?
I mean, we're certainly watching very closely what is happening in key markets like China. I mean, China is facing crippling energy shortages. There's certainly certain shortages in 20 provinces so far, causing a potential drop in industrial output. We'll be watching what is happening in Europe as well as they face a very serious natural gas crisis. Again, the whole risk is that industry will have to shut down, particularly energy intensive industry, if it's a cold winter. So we are really facing a real winter of discontent if we have a real squeeze on power supplies.
What is the cause of these shortages, Halima?
I mean, it's multifaceted. I mean, you want to think about the fact that stocks for natural gas are historically low in Europe. You had an unseasonably cold winter in Asia that started pulling demand. And then there have been real issues about supply. Real question marks on, was Russia holding back gas supplies into Europe to try to force completion of Nord Stream 2? Is there additional surge capacity in Russia? There was a confluence of factors, but there was also the issue that you had, lower than expected and needed wind power. There have been issues with hydropower. And so the question is, what is your backup when these renewables fail? And again, the issue will be, if we have an unseasonably cold winter, is there enough gas in the system to prevent these crippling power cuts?
John, what do you say?
We're on the cusp of recessionary influences from these high oil prices really right now. And it's been a double whammy for the rest of the world, Tyler, because not only are they getting hit with high oil prices, they're also seeing the dollar rally, which crude oil is denominated in, which is, for their currency translation purposes, only adding to the higher costs. Here in the U.S., it's a mixed bag because of our much larger energy footprint that we've had in a long time. I mean, Houston is just on an incredible roll right now with $80 crude, $5 gas, and Texas A&M beating Alabama in college football on Saturday. I mean, you can't live with these people right now. But beyond that, part of the problem that you just asked about, it's Saudi Arabia. I mean, they're sticking it to us. They could put a lot more oil on the market. They could extinguish this rally with the stroke of a pen or a flip of a few switches, and they're not doing it. They have messed up this market more times than you really could shake a stick at, and here we are again.
Halima, where do you think prices are going from here?
I mean, again, I think we're going to have to really be watching what happens with winter. If we get a warm winter, you're not going to have the demand that we're potentially looking at for natural gas, and importantly, for oil as a replacement product for gas. I mean, part of the reason why we are having this run up in oil prices is a concern that it's going to be a replacement product for gas. And so a lot will hinge on, what does winter look like? And John mentioned Saudi Arabia. I do think Saudi Arabia is going to be under increasing pressure from the Biden administration to put more barrels on this market. And I do think the Biden administration, the higher prices go, we'll start to think about, again, tapping a strategic petroleum reserve. And that may not actually work, much for very long in terms of capping, gasoline price in the U.S. But I think they might go that route to try to incentivize Saudi to put more barrels on the market.
Yeah,